Welcome to the world-renowned Invest in Her podcast with your host, Catherine Gray. Catherine is a keynote and TEDx speaker, author, executive producer of the movie Show Her the Money, also CEO and founder of She Angel Investors and co-founder of the She Angels Foundation. Our weekly show of powerhouse women, founders, funders, and changemakers is sure to inspire you. Let's go.
Welcome to this week's episode of Invest in Her. I'm your host, Catherine Gray, founder of She Angel Investors and co-founder of the She Angels Foundation, and the executive producer of Show Her the Money movie. And by the way, we have a book coming out of the same name. So super excited about all that. But today is about digital assets and how you're going to start seeing them in traditional finance, in business, in even banking. I am so fascinated with this topic and was so fortunate to meet at a recent New York Tech Week luncheon that we put on at Union Square Cafe with a group of about 30 incredibly brilliant women. And one of them is on our show today, and she has a new book out. It is called From Hoodies to Suits, Innovating Digital Assets for Traditional Finance. Fascinating, right? We're going to talk about that today. She's the expert, 20 years in finance. She has her own company. She's the chief business officer for Kadena. And hopefully I said that right. She'll tell me. And the author of this amazing book that everybody should get to learn how the digital assets are going to revolutionize the financial industry. Let's take it away with Annelise Osborne. Annelise, welcome to the show.
Catherine, thank you so much for having me. I'm so honored to be here. And that was an amazing lunch. So thank you for inviting me to that lunch to begin with, just to bring thought leaders together. And they happen to be women.
Exactly. And what a group of women it was, right? Really, you get a group of women together who are really brilliant and smart and all doing innovative things like you are, and magic happens, right?
So true. So true.
Yeah. So you gave me this book when I was there, and I was like, oh my God, this topic is something I'm so interested in. I've been even talking to my friend, my financial advisor, who I've known for 30 years. He's so entrenched in the old way things are done. And I'm like, you don't realize this blockchain and digital assets is infiltrating the regular business community and banking, and it is going to change that, it's going to be different than it has been in the past. And I am so excited to have you talk about it today. And I'm going to let you do most of the talking because I know nothing about this except what I've read in your book. And I love that you kind of, as best as you can, put it into lay terms that someone like even me can understand. So everybody should get this book, From Hoodies to Suits. Let's talk about what that means. Innovating Digital Assets for Traditional Finance. People can get this book on Amazon, and I will mention it again at the end. But From Hoodies to Suits, let's talk about what that means. I know because I've looked at the book, but why don't you talk about why you named it that?
Sure. So hoodies, in my idea, is really kind of the tech and entrepreneurs, right? I feel like it's really like Silicon Valley was full of hoodies, and that was the thought process.
And really, let's be real, like the tech bros.
Yes.
Yeah.
And then kind of the suits being more of like the Wall Street understanding of, it's really just understanding of finance. It's kind of adults in the room, understanding risk, compliance, regulation, structure. I don't think finance is broken. I just think it can be upgraded. It's kind of how I look at it. So here, From Hoodies to Suits is the idea of this technology. The hoodies created a $3 trillion market cap for crypto. And then the idea of how do we move that along further is really kind of with the institutions, but also understanding kind of the suits mentality and how do we work together. So that's really the idea of the title, From Hoodies to Suits, the technology moving. I was definitely a suit that I would never say I'm really a hoodie, but I'm kind of parallel in between. And really just how we'll upgrade finance. But think about, like, this is a supercomputer we hold in our hands, our phones. right? So think about phones way back when, right? We never thought about the technology. We just thought about how more user-friendly it was. Think about the floor of the New York Stock Exchange, which 20 years ago was shoulder to shoulder and bustling. And now it's empty and more or less used for media and promotion. And that's because technology has already started to upgrade finance. And so I think the way I look at it is blockchain is just the next iteration, and we won't have to talk about blockchain because it will be underlying different aspects.
Yeah, speaking of the stock exchange, you're right. I was at NASDAQ last year. We were promoting our movie and everything that we're doing with Show Her the Money. And you're right, it was more about media than about actual buying and selling of stock. It wasn't quite the experience I expected, but you're right. It was a cool experience, but it totally different than it was back then. Things are changing. And I think people have a hard time embracing change, but what I liked about your book is you're saying, here are these people that have created all these popular social media, Facebook, Instagram, and different technologies that we use, right? And over here's the bankers, and we think of them as being stodgy, and things are the same old way. And it's kind of like this is bringing them together, right?
That's the whole goal, right? It is. And people also understand, like, yes, I think the goal is to bring them together, and also understanding that like blockchain and Bitcoin are not the same thing, and Bitcoin can have a negative connotation, but I feel like not quite so much anymore with everything that's happening with regulation and also ETFs that use Bitcoin as an alternative investment. But we can dive into any of that if you would like.
I think that there's people that have been in that financial institutions for a very long time that still do not think highly of digital assets, especially like crypto. And like you're saying, I think more and more people are embracing things like Bitcoin and Ethereum, I understand, is actually better for the planet. You know, who knew that Bitcoin uses so much energy, right? Isn't it Bitcoin that uses a lot of energy? And whoever thought that those things were even environmental? All, news to me. I had a kid tell me this a few years ago, and I'm like, what do you mean Bitcoin uses energy? What does that even mean? But I think people from my generation, and I don't mean to date myself, but I am a baby boomer, has a hard time wrapping our head around a new type of thing that, banks would use, new digital assets. But from reading your book, it's interesting understanding where everybody thinks that, well, first of all, they think exactly what you just said, that crypto and blockchain are the same thing, which is not true. And that blockchain is actually, and I've always thought this anyway, would be good for helping all kinds of businesses to be more efficient. And that is something that, I've known for a while. I did have somebody talk about this on my podcast a few years ago, and I still think it's hard for people to understand it because it's so new and a little bit intricate and hard to understand the language around it. And then, of course, everybody throws it in the pot with cryptocurrency and fraud and all of this. So, you can't fathom that a bank would be using this now, but this is where it's headed. So let's talk about that. How will banks, because this is what I'm really curious about, why I want to have you on. How will the banks start utilizing blockchain, and will they also be using cryptocurrency, or is it just called digital assets? Like, can you explain that?
Sure. So crypto is an application of blockchain technology. It is built on top of blockchain technology. And blockchain is actually the rails that allows it to exist. From a banking perspective, we're always searching for ways to make money or save money. And this technology could technically do both for different use case applications. The biggest use case is really back office. So it doesn't sound as sexy, but some of the funds that are out there that are saving, anywhere from 50 to 100 basis points on actually tokenizing their funds from a back office distribution costs perspective, that's real money because we're talking about a lot of AUM here. So Figure Markets came out with something to say they tokenize loans, they tokenize HELOCs. and they've done securitizations, and they have said they save 85 basis points generally on deals, right?
And wait a minute, let me stop you there.
Yeah.
Tokenizing loans, what does that even mean?
So it's in essence having a digital representation of a loan. So it's really the same. So when I look at, you do have cryptocurrencies, right? And I think cryptocurrencies, which aren't necessarily backed by an investment, like we're in finance are used to valuing investments or income. So crypto is one kind of alternative investment asset class, which is really just what the market pays for it. However, using blockchain underneath loans, for example, you could actually create, and we're going to get to money because I think that's the biggest use case, and that's where the real applications, killer applications are right now. But you could have programmable, the bonds could be self-programmable, right? You can actually put them in so they pay out when they're supposed to pay. You don't need as many people in between. There's a constant audible trail of where it actually is what's happening. You can have people step in like servicers or special services as need be, but it just is a much more efficient rail and system to actually create. And you could also transfer it from person to person. It could be, you generally will transfer this to whitelisted, anything that's a security. You could ring fence it against sanctioned countries, so nothing can go to a sanctioned country. You have more control over it. So regulators should like the effects of that this technology can offer. It's just a matter of change, which Catherine, you mentioned about how difficult it is to change.
And what I liked about what I read in your book is that, let's say they digitize this loan process. Just like you said, it actually gives it more regulation, which everybody thinks it doesn't, and actually probably gets rid of, according to your book, title companies, because it's always so hard to chase where the titles are. You have to have a company go and dig and find it where all the transactions are on that blockchain, making it easy to know when you're buying or selling a home or whatever, what the history is on that property that you're buying, so that there's not some lien you don't know about. Is this right? Like, this is going to make it better, right?
Absolutely. That said, title insurance in the United States and the way that we have held title is not as cohesive as some other countries. So I think it's a little bit more difficult in the US because it's every town, city, and county that have to figure out, title insurance versus some other countries. I know the UK has been looking at it because it's a bit more centralized there, and some other countries as well. But that is a prime application of what could be done. But you had asked a question about banks, and I kind of went off a little bit on securities first, but banks are really payment processors if you think about it, right? So they will, you'll put your money in a bank, they'll lend the money out to someone else, and they'll make money off of that spread. So we'll come back to that because in decentralized finance and what crypto offers, you can actually do that. I can be the bank, right? I can put money in and lend it out to someone else, and I get the yields, and so we cut out the middleman. But institutions right now are really focused on payments and stablecoin. How can I get money faster, cheaper, more secure? The Genius Act was passed, and it's gone to the Senate. It's gone to the House, and it's on its way to be signed. And so the Genius Act is actually for stablecoin to have understanding of what stablecoins are in the United States. One of the problems with institutional adoption of the technology is, I think, threefold. One is regulation. There hasn't been clear regulation. Institutions can't play in the gray. It's black or white. Two is education, which is why I wrote the book, was trying to just so more people understand it and aren't afraid or don't ask the questions. And then the last is just interoperability, which is really plugging in systems together, old systems and new systems, and then blockchains talking to each other. So what the Genius Act is doing is actually coming out in the United States saying these are stable coins. This is what you are, this is what they are, and they're making them real and identifying them. And they will be regulated. They will be backed in essence by US dollars. What a stable coin is, it's a digital representation of a stable value. So generally, I think 99% of the time they're backed by either US dollars or US treasuries.
So they're actually backed, as opposed to like, say, Bitcoin that isn't backed by anything like that. So the stable coin is backed by the US dollar.
Both of them are US dollar oriented. So that's actually beneficial for the United States as well, because it helps for the demand of US dollars. and domination in currencies. And so that is beneficial. But why do I want a stable coin when we have money right now?
Right. Yeah, that's a great question. I would love for you to answer that.
Sure. So the transferring of money. So if I use a credit card, if I transfer money generally to you, it generally takes time. And there's usually a float. I got a check from the bank. It took 5 days probably to get to me. Took 5 days to cash it when I cashed it actually even on my phone. And so that's like a 10-day float period. So if I use stablecoin, I can transfer it to you today and you get it immediately. It's in your account. Even if
Kind of like Zelle.
funds, there's still a bit of a lag time before you can spend the money before it actually goes through. So it's not as fast, but the idea is, because that's really messaging to transfer funds, stablecoin, it goes to you immediately. So if you think about it, there's no lag time. If I'm an institution and I have $1 trillion I'm transferring overnight, then it will save me time that I can redeploy that money today and I don't have to wait, right? $1 billion, say, but still there's
makes things more efficient
for that lag. So that's one thing as well. But also a lot of times people are trying to think of all the multiple currencies out there. If I want to send money to my family outside the United States, or I want to pay a bill of something outside the United States, there's a lot of currency fluctuations and there's a lot of people you have to pay along the way to get it there. But if you're all using the stable valuation of a stable coin, you can transfer it immediately. You don't have all the cross-border fees that you have for cross-border transactions. And it happens right away. And so a lot of countries are actually looking at creating central bank digital currencies, which are a reflection of their own currency, just to decrease this cost of cross-border payments. So it's faster because it's immediate. It's lower cost because you don't have kind of intermediaries in the way. Even if you think about, MasterCard and Visa are looking at stable coins and how they can do it. The banks, JP Morgan has had their own internal stable coin. They just filed for an external stable coin. PayPal, you can use stable coin. You don't even realize it's part of this also is that it's hard to mentally grasp how do I use something blockchain or crypto because it's not in my day-to-day. So it needs to be easy to use. You can go onto the PayPal app and you can just you can get stablecoin from your PayPal app. So you don't even need to know that it's stablecoin, but it's PayPal USD. Also, there's other things that are happening that there's a lot of tokenized treasury funds. So the idea of a tokenized treasury fund is it is liquid because I can transfer it back and forth to you, but I actually get the yield of the US Treasury. So that is a security. So you have to do KYC, so know your customer. So you have to be signed up and saying they'll do a background check that I'm not laundering money. But then I can hold my cash in a fully liquid fund that I can take out, but I can earn that treasury yield while I hold it in there. So that's kind of a backstop to money. It's also programmable. One last thing. So if you have margin calls and you're a trading shop, you can use stablecoin programmable to transfer immediately as well. So any margin calls you can automatically fill.
Yeah, I mean, I think what makes people nervous is they just think of it as cryptocurrency and money laundering and fraud. And I read in your book that it's really a very small percentage that has been affected in that way. And there's money laundering that it doesn't have to be crypto, right? So I'm really learning from what you've written here and just understanding that this is coming whether you like it or not. So we might as well embrace it and especially learn about it. That's why I think people should get your book because I think it teaches about this new transition and how it's coming, and you might as well read about it and learn about it. I did see that there's a quote in your book from BlackRock CEO Larry Fink. So he says in your book, one of the most influential finance titans, says, we do believe we can create more tokenization of assets and securities. That's what Bitcoin is. And it could revolutionize finance. So also Jamie Dimon, of course, from JP Morgan, as you said, also was a naysayer, now is embracing it. And most of the people in that arena are. I mean, they have to, right? It's coming. It's here.
There is, even more recently, Larry Fink said everything will be tokenized. So I was at Davos this year. They were both there, as well as other large asset managers and banks, and they all talked about tokenization, which was interesting because there's a path towards it. And I think with this new administration and the SEC being more open to regulating innovation, I think there'll be a lot of, this is definitely a year of growth with everything that's coming out.
Right. And yeah, I'm just taking a look at your book because you have a lot of great little excerpts here I wanted to share. This is another one from your book. The suits can take what the hoodies built and make it more efficient and usable in the regulated financial markets. So no longer will banks be able to hold up clients' money, like you just said, for to cash a check or transfer funds. Blockchain isn't a replacement system for today's financial markets. It's a building block for a better way of doing business. And I just want people to walk away knowing that that seems to be the theory, is it's not going to rebuild it. It's just going to make it better. And so it's coming. Everybody's got to embrace it, whether they want to or not. So you might as well pick up Annelise's book and read about it, learn about it. You also put in a glossary of terminologies and just the difference between the crypto, the blockchain, and how banks will be using this and how it will affect your life, like you said, even if you're like, say, getting a loan. Because it's hard to wrap around our heads around change. I think especially for the baby boomers, Gen Z, millennials, I'm sure they're embracing it all, but we have to get on this bus and learn about it. And so thanks for making this book.
You're so welcome. I thank you so much for the kind words of the book. I actually do go into the changing generations and the changing wealth portfolios that are coming with the great wealth transfer coming as well. And what millennials and Gen Z expect. They think very differently. And they look to invest differently as well. And they are not, there was a study done recently, I forget the numbers, but an overwhelming majority will not go with their parents' financial advisors because they look at investing. They'd much rather click it as an app on their phone. And so that's why if you look at Robinhood and how Robinhood is increasing, they're 85% of them are under 35, the investors on Robinhood. And it's just it's just a little bit of a shift. So I do think that you still need financial advisors because obviously there's new things to invest in, and blockchain will open up the playing field to have more opportunities to invest in alternative assets as well.
Right. And I was reading like a really huge percentage of people own like Bitcoin and cryptocurrency. I don't know if you had the numbers in there. I believe it was upward of 30% or more.
It's more than that.
Yeah, I
and
think it is
interesting in different countries. In some countries, it's much more, it's a much higher percentage, but also we have a stable currency. So there's a lot of people that look to cryptocurrencies to actually be a store of value if your currency has a lot of fluctuation.
right. And it seems like it's changing and learning. Like if the Bitcoin, was using a lot of energy, now the Ethereum and some of these others don't. I don't even know what that means, but I'm just saying what I read. But I mean, I don't even know how it uses energy, but I'll believe it.
I'll tell you, it's from mining. It's from cryptographic mining, from the
Right.
proof of work, which the idea of Bitcoin was to actually, for validation of mining blocks, it takes energy because you have to solve a cryptographic puzzle. There are ways to do that. I actually work for a blockchain that's also proof of work, Kadena. But it's not as energy intensive because instead of everyone trying to solve the same puzzle, we have this miner solves the puzzle. But there's also different ways. A lot of it is very green energy that they're using for Bitcoin mining.
Is it also because the stable coin is based on the dollar, so it's not involved in mining? Or, I mean, I'm just guessing here.
No, the mining has to do with how the blocks are created and validated.
Oh, got it.
So
Okay.
there's that, and then there's proof of stake, which is actually putting money behind something. So if you have more money behind it, then you can validate it and you get paid for validating it. So there are different ideas, but I also think, Bitcoin was truly revolutionary when it came out. The white paper was published in 2008, and it's the first step, right? And so I feel like that was truly amazing what Bitcoin blockchain does, but that was the first step, and we're building on top and making blockchains faster and better and more secure.
Right. Right. I think the biggest takeaway is for people to understand that blockchain and crypto are two different things, and that blockchain is making things more efficient in that uh, you always have the history of what's transpired in the transactions, right? You can never lose that. It's always there.
Yes.
And I could see how that would be very efficient for banking. Besides banking, though, this is going to be utilized in all different genres of business, correct?
Absolutely. So we have supply chain as well. We're working in Europe with some projects because digital product passport, which the is following a product through its life cycle to know where it came from. That is going into regulation in the EU. And so we have some digital product passport examples and grantees that have created. We also have kind of fan engagement. How do you connect more closer with your, it could be customers. It could be, we sponsor the Croatian Football Federation and we have their fan token. No, people don't realize that it's actually a token. It's just signing up for fan engagement, right? They'll sign up to be a fan. And through that, they actually there's a lot more that they can receive and there's more direct interaction between the two.
And is this thing they receive digital, right?
It's on their wallet. It's just signing up. For them, they don't know it. They just use their phone and they sign up to be on to kind of for a fan engagement. But through that, they can get discounts. They can get invites to special events. So there's a lot of different ways because then you can get more feedback because you know who's part of it, and it's the way it has been centralized, but it's more efficient in this decentralized world using tokens.
How is it working in that industry when most people don't understand it? I gather it's why you wrote the book.
It's so funny when I first started back in 2018 and my partner who had a broker dealer and I had launched into digital assets. We were merging with a smaller tech company and those were all the hoodies and he and I were the suits. It's just different. And then going back to my previous industry, a lot of people don't understand it and they're afraid to ask questions or they don't want to talk about it because it's change and it's not comfortable. In the same sense, I think there's so much that can be done. So I get passionate about seeing how the world is moving forward, how we can have, fully digital bonds in Europe where they're actually generally when a bond is done now, they have the paper version and they have a digital twin to show that it can be more efficient. But I just get excited. I get excited to show kind of the progress and what we're doing and that we're making a difference and being part of it. It is like, pushing a boulder up a hill for sure.
I can imagine, but I feel like there's a huge amount of progress right now. And I was kind of one of those people. I thought this will never infiltrate the banks. My financial advisor told me so. And then I sent him your book and I was like, wait a minute, I think this is going to be in the bank and we better know about it. So that's why I wanted to have you on the show and have people thinking about how this is going to affect their business, their personal life, embracing what the banks are doing with digital assets and how this is going to work, but how it will make things better and what are the pluses and what are the minuses. And it's progress, right?
Sure. So we talked a little bit about back office systems. I know we're running close on time, but the make money side of it is really if you look at the asset managers and there's so many fewer public companies today, and there's so many more private assets. And what the asset managers are doing is looking to figure out how can I get more assets under management? Well, I'm always going to the same people that have a minimum $5 million check for my funds. If I can decrease that, for example, Apollo, Hamilton Lane, Franklin Templeton have done private equity funds, then I can have a lower minimum buy-in of say 200,000. So I can get more people to invest in my private equity fund. And so it's opening up more opportunities. And the reason blockchain helps with that is because it makes the cost so much less of onboarding people and the back office cost. So there's another way for like, how do we increase assets under management, especially when the ecosystem is changing and this money is going into, more people's hands. How do we get them to invest?
I love that. That's fascinating. So it's groundbreaking for private equity, venture capital, in making it more accessible for people to come in at lower investment amounts because it's saving them money. That's fascinating. Thanks for sharing that. My viewers are going to love to hear about that. So, Annelise, how do people find you? How do they find your book, From Hoodies to
Oh,
Suits, um, by
right
Annelise
here.
Osborne? There you go. Hold it up for those watching, but for those just listening, you can get this book. Also, for those listening, you can get this on Amazon, of course, or anywhere that you buy your books. But it is one more time called, you can hold it up,
Oh,
From Hoodies to Suits. It's Innovating Digital Assets for Traditional Finance. Fascinating. It'll help you learn all about it and put it into layman's terms. It's by Annelise Osborne. Look it up, check her out. Annelise, are you also on LinkedIn?
on LinkedIn. I'm absolutely on LinkedIn. Easiest way, shoot me a note on LinkedIn if you would like to have a conversation. I'm on Twitter as well, but I'm not very good at that. So LinkedIn is best.
Yeah, I'm not good at that either. Uh, So look up Annelise Osborne. Please check out her book. Go buy the book. You'll be glad that you did, so you know what's coming down the pike in traditional finance with regard to blockchain and the digital asset entity that's coming down the pike. So you can also find me, Catherine Gray, on LinkedIn. Catherine with a C, Gray with an A. You can visit our websites, which are showherthemoneymovie.com, as well as sheangelinvestors.com. We have lots of resources, the show being one of them. We thank you for taking the time to tune in. We hope you learned a lot. Annelise, thanks for being a great guest. Make it a
Thank you
good
so
week,
much for
everybody.
having me. Thanks. Bye.
Thank you.